Hey, let's get started. We've got our Silicon Dragon show today, and we have a wonderful guest that I'd like everyone to welcome. It's Teddy Himler. Hi, Teddy.
Hi, Rebecca. How are you?
Good, good. Teddy's joining us from New York City. So in case you hear sirens in the background, you know it's New York City. But he's in the heart of the action. And he's always been in the heart of the action when it comes to technology deals globally and in Asia, in Silicon Valley, Jakarta. But yeah, so Teddy has got a lot of experience that he's going to be sharing with us today. So please get your questions ready for him. You could put them in the chat box, the chat, and I will be watching them and I will pick out the best questions and comments. So please get those comments ready. So I'm just going to do an introduction with Teddy, and we're going to talk for about 20 minutes or so, and then we're going to open it up to your Q&A. So let's get started. Anyhow, I've been doing this show for quite some time now, since
Great.
COVID, because we could not do our shows on live anymore, but now we're doing them online and live. And actually, we've got our CES show coming up on January 10th. So if you're in Vegas for CES, please join us January 10th. We have a lot of elements to our Silicon Dragon ventures. We have books, e-newsletter, the membership, our online series, videos, and a lot of different communication tools. Everything you ever wanted to do with social media, we've got. We've got a plethora of books, 4 of them, maybe a 5th one coming up. Let me just backtrack 1 second. Silicon Dragon, Startup Asia, Tech Titans of China, Silicon Heartland. So Teddy and I met, maybe 10 years ago in
10 years
Silicon
ago,
Valley.
yeah.
Yeah, and so in a way, his career has kind of tracked these books, and I'm always tracking the trends from Silicon Valley to Asia to China to the U.S. And I know Teddy has been also on that same trail. So a little bit about Teddy. And Teddy, why don't you take us through this because there's a lot to
Sure.
absorb here.
Yeah, I'll give a brief background of myself.
Yeah.
I moved out to the West Coast because of my interest in Silicon Valley and technology and what was happening out there in and around 2011. And I was an analyst in the Goldman Sachs Technology Investment Banking Group, where we were working on financings and M&A across the technology stack. The technology group at that time, felt like a vertical among every other vertical. But the bet was that technology would extend horizontally across all the other industries that we were working on, whether that's healthcare, retail, industrials, energy. And I think we've kind of seen that play out in the last 10 years by sector. In joining SoftBank in 2013, I actually also saw the extension of technology across geography. So, SoftBank, large multinational, telecom and technology investor, most famous now for the SoftBank Vision funds. In the subsequent 10 years, that from joining SoftBank, it's grown into, one of the largest technology investors in the world. But concurrent with that was also the growth of so many major ecosystems of technology around the world that you, Rebecca, have chronicled in many of your books. At SoftBank, I'd worked in California, in Southeast Asia, for a period of time where Antler was founded many years later. And then back in New York, I also did a stint at the venture capital arm of Comcast NBCU, where we were investing on behalf of the corporate in a wide array of technology, media, and telecom assets, all at venture scale, mostly in the U.S. And I think,
Yeah, I think that's where we met, Teddy, when you were in Silicon Valley at
yes,
SoftBank. And I
that's
remember
right.
visiting the office there, and that's where we met. And
That's right.
yeah, and just recently I ran into your father at a book launch event in New York City. And we got to talking and we said, there's so many things that we knew in common. And he said, well, you must know my son. And I said, yeah. And he said, Teddy. I said, yeah, I know him. Yeah. I've been tracking his career, his very entrepreneurial investor career throughout all of these regions. So it was really interesting as a small
Yeah.
world
Well,
tidbit
I hope he's listening, because he's been a big inspiration for my interest in the, in the global technology, entrepreneurship and investing.
Okay.
So Antler largely comes out of its inception largely stems from that period in Southeast Asia in 2013 to 2018, when there was a massive rush towards building the core digital infrastructure of that 700 million population region. And the founder of Antler, Magnus Grimeland, had the insight that the greatest, the next generation of tech companies would largely come from the previous generations, second or third in command, that are then leaving and starting, the next new companies. And it was apparent, for those familiar with the Southeast Asia ecosystem, in companies like Gojek, where the founder had previously worked with Magnus at his e-commerce site, and then went on to found what is now Indonesia's largest super app. It was true with C and Garena, where many of the top executives there and founders had come from other technology companies in the region prior. And so what Antler really tries to do at its basic level is find the greatest entrepreneurs coming out of those technology companies in what started in Singapore, but we've expanded it now to 30 cities around the world, where we're giving entrepreneurs a chance at day zero to come and work with us in our regional offices, and over a 3-month program, workshop and launch new companies, wherein we're investing at the pre-seed stage for a small percentage of ownership, but a large impact in advice, network, counsel for helping these companies grow. And the growth story has been amazing, I think, since 2018. I joined in 2021, but we've now, to give you some stats, we run 17 funds. We have 2 global funds. One is the growth fund that I run. The other is a index vehicle that invests into each of the regional funds. We have 300 or so employees. We've helped 6,000 entrepreneurs get started on their business and invested in 1,000 of those companies and formed teams to make that happen. We have several companies that are now worth in the hundreds of millions, approaching $1 billion. And we have about $1 billion of assets under management. So our goal, this has been a very eventful 5 years for Antler. Our goal for the next 5 is to continue to develop into this global technology investment asset manager.
Well, great. Tell us a little bit about this new growth fund. And
Sure.
you just raised a $285 million growth fund, and then Antler Elevate, and that's what you're running, and you joined. So that's what you're concentrating on now, right?
That's right. So it really stems back from my time investing in Southeast Asia. At SoftBank, we'd invested in one of the leading e-commerce companies there called Tokopedia, but there was a rival e-commerce company there called Lazada. And Rebecca, you know this from chronicling the rise of the region, but when Lazada was sold to Alibaba for a final price of $6 billion, a couple of the co-founders left and started new things. One of whom was my friend Martel Hardenberg, who joined Antler and recruited me to come and help launch a multi-stage vehicle. The idea was pretty simple. We have this amazing base level infrastructure of partners who are working on day zero inception stage investing, but over time, a lot of those companies would grow and be eligible for Series A and B stage capital, like a continuity fund. We've also come to realize that we're seeing a lot of really interesting concurrent innovation that happens all over the world. So, we may see a company like Plaid, which is an open banking leader in the US, a very innovative company. We've seen that open banking trend exist in East Asia and Africa and LATAM, and we have feet on the street. Unlike many other venture capital firms who often are accused of being flyover investors, we have feet on the street in these ecosystems, and we're able to find and work with the right companies and help them grow. And there are many themes that we consistently see that wash across the world. I think at SoftBank we call this time machine investing. The future is here, but it's not evenly distributed, or geographic arbitrage. But we have a great respect for the local entrepreneurs that are building in their local ecosystems.
Right. You also have a theme around digital dominoes. And that is a theme that I know is very prominent throughout Asia. So I want to bring up this screen as well with your digital dominoes on it. Here we go, digital dominoes. Can you explain to us what's going on here in this slide, Teddy?
Yeah. The idea is relatively simple. It's a form of a demonstration effect in technology, wherein a lot of there's no denying that the venture capital industry started in the US, and primarily in Silicon Valley and a little bit in the Northeast, but it's since expanded to every region in the world. It's almost like the Industrial Revolution, starting in the UK or in the US and then expanding all over the world back in the 19th century. But this sort of digital revolution that largely started in the 90s with the advent of personal computing and the internet has grown and created massive economic value across the most every region of the world. So this is a small subset of that, but the leaders in the US inspired leaders in China, like a Jack or Pony Ma at Alibaba and Tencent, inspired a next set of leaders in India. You may recall the Flipkart founders in India who sold their business to Walmart were former Amazon employees. Similarly, I don't think many people know this story, but Jack Ma took a visit down to Indonesia in 2012, and the CEO of Tokopedia told me he had the opportunity to meet him, where Jack Ma gave him the tip that, hey, if you enable safety and trust when transacting online through an escrow system, you'll be able to grow faster. And Tokopedia has now become one of the leading e-commerce companies in Southeast Asia. Most recently, this week, acquired by ByteDance TikTok. And that insight that you had from China, almost a decade later, had transcended into a massive outcome in Indonesia, where now Tokopedia and Gojek are 5% of Indonesian GDP. Pretty amazing, right? I was part of a team at SoftBank that had launched a Latin America fund, a $5 billion fund in 2017, when Latin America only had $3 billion of annual VC funding. And what's really amazing is, ultimately that fund was run by, a bunch of other SoftBank executives, but that catalyzed a massive reinvigorate the LATAM ecosystem, which is, today one of the more exciting technology regions on the planet. I'm particularly excited about the Middle East, and not only the geopolitical, but also the entrepreneurial shifts that are happening there. And you've already had a couple of key winners like Careem, which sold to Uber a number of years ago. And I think I may be missing the heartland on here, Rebecca, the subject of your most recent book. But the heartland of the United States is also becoming a really exciting place to invest, as is Africa. So in other words, the waves of technology have washed over each subsequent region with a little bit of innovation and riffing on these core initial themes. So it's something that I think you and I both are very interested in.
Oh, yeah, absolutely. Yeah, these tech waves go from border to border to border, and they amplify as they go along. So it has been very interesting, and I think this slide is very telling. And
Yeah,
yeah, so if we
thanks.
added another one, there's not another market in here to add, is there? This is the world, it seems that.
Yeah, maybe. I mean, I actually think this is an older version of the slide, but I have Europe in there too, which is,
Of Europe. Oh,
call it,
yes, we cannot forget Europe.
we shouldn't, because actually Europe is one of the most exciting, markets today, for a variety of reasons. It's diverged in the US in a lot of critical ways, but the Nordics and UK, France is an amazing ecosystem. But if you think about the EU plus France, the EU plus UK, it is the second or third largest ecosystem on the planet.
Sure.
Let me give you three stats. The first is in 2013, you had 39 cities throughout the world that had minted a unicorn, most of which were in the US. A unicorn, a company greater than $1 billion.
Right.
You now have about 200 cities globally. So we've lived through this amazing period of,
How many decacorns?
I have to get back to you on that. Uh,
Unicorn is becoming so common, it almost doesn't mean that much anymore if there's 200 of them.
Yeah, I think so. Some have lost their horns recently, but yeah, it's
Yeah,
200 cities. So that's one. Two is, so I was looking at the statistics this morning, actually. There was like in 2021, there's like 600 billion of venture funding. Now there's close to 300 billion, so it's gone down.
right.
Thank you, Jerome Powell. And of that, the US now comprises a minority, a small minority, like 45% of global funding. But for the first time in the last 3 years, the majority of venture capital funding has gone to the rest of the world.
Right.
I think that's pretty amazing.
It is.
If you think about in 2013, actually, Rebecca, that's when we met and I spoke on your panel in 2013. There was one region of the world that had greater than $10 billion of VC funding. That was the US. Today, that number is about 13. So the rise of the rest phenomenon, across globally, but also, by the way, in the US, just in the US alone, is a very lucky trend, I think, that you and I have been a part of. It's been very
Absolutely.
cool to see this happen.
Absolutely.
And
Yeah,
so
and this chart is very excellent because you can see the trend lines here. You also, if you go out into 2022, it's a little bit different, but I
yeah.
think China fell, India rose, right? UK probably rose. What else?
The interesting thing is a lot of the emerging markets were off of low bases, and even LATAM has shown that it like some big signs of resuscitation from the decrease from 2021 more
Mhm.
recently. But certainly China, for many idiosyncratic and regulatory reasons, has been most affected, I think, on a percentage basis in VC funding. Just the uncertainty there has been
Right.
difficult. We have a fund that is what we call it. It's called you like the name, the Antler Dragon Fund. Calling out my partners Alex and Kay. Their idea is brilliant. I think it's amazing. Finding Chinese entrepreneurs that want to build for the world. I mean, think about Shein and ByteDance. These are companies that have really expanded, and now Temu and Pinduoduo have
Right.
expanded beyond the Chinese border, such
Right.
that the international growth story is probably the most exciting story for these companies.
Yeah.
So,
Shein is
you know,
fast. Tell what they are, Teddy, because I think a lot of people on the Zoom here may not know.
yeah. So, it was a company that started aggregating wedding dress manufacturers, all of which are like on the Yangtze in China, like right down the river, and aggregating them and selling wedding dresses initially. The business was called She
Yeah.
Inside, but
Yeah.
they've become the most famous in the last 5 years for a ruthlessly efficient supply chain where they can turn around designs that they're selling online within days. So they have an incredible supply chain model wherein their inventory is a fraction of the inventory that you see at major fashion houses around the world, because they're selling just in time. And that really has become just an incredibly operated business that's expanded outside of China now to LATAM, to Europe, to Turkey, and a lot of the consumers are frankly in the US. You may not know it, but maybe some of your fashion comes from either from Shein or through direct channels that ultimately were Shein before.
Right. So, and Pinduoduo, Timo.
So
Pinduoduo
Pinduoduo pioneered social commerce, which is another fascinating trend. You don't see a lot of this in the US, but you obviously had the group buying phenomenons of Groupon back in the day. But this is,
right.
but what Pinduoduo was most famous for was gamified social selling in China, and that was hugely popular, such that the market cap of Pinduoduo is now greater than that of Alibaba. Alibaba is still orders of magnitude larger, but the market cap and speculation that Pinduoduo in China has a secret formula that's been working really well.
And their brand in the
interesting.
US, they have a brand in the US.
Yeah, so in the Super Bowl, you probably saw the Temu advertising. It's become one of the more popular e-commerce sites, largely because the costs are so compelling to buy from the Temu site. But I'll bring it back to something, which is like, okay, so what we think about is who is going to, so the direction of travel of these digital dominoes, for simplicity, used to be, US out. You had Apple selling phones into China. The innovation came from the US out. But there's an interesting phenomenon that I call, the Marco Polo effect, which is you're taking technologies and business model strategies that start in Asia and can then expand to the Western world. And that's
like QR codes. QR codes is one of them, I think.
It's a good example. Yeah, there's plenty.
Bike sharing.
It makes my job a lot more interesting, because there's a lot of the old playbook was study the US and figure out what happens outside, but actually the new playbook is both the arrows go in both directions, and from Europe too. I'm here at Antler. We have an amazing team in the Nordics, and many of our founding team is from the Nordics. The type of innovations you're seeing in the energy sector in the Nordics, remember, they're 85% EV penetration in the Nordics, as opposed to 10%.
And they're cold. They're cold. They need energy.
It's true. And they also have an abundance of energy up there. And so they've been on the forefront of many of the innovations in clean energy and sustainability. So every region, I'm like, I should, this is a very like Adam Smith perspective, but every country, every region has their different specializations and interests that you kind of see manifest in what's coming out in the next great company.
So for a recent CNBC article I wrote on open source AI, it was very interesting to see this French AI hub. And I think you've been to this area, what they call it, Station F, in the middle of Paris. And two of the major open source AI companies have started there, and they're both raised a lot of funding. So that's another interesting trend. You do see this specialization, I think, by country and by market and by hub.
We've seen OpenAI attempts at creating the OpenAI of France, Germany, Korea, Japan. So will be interesting to see what happens if the internet, these really exciting new AI businesses become balkanized, like search. Many places search, whether it's in China or Korea or Japan or the US, search is more has, a lot of time been balkanized, or e-commerce, right? There's regional winners in
Sure.
e-commerce, but there's some
Sure.
technologies that are not like regionalized, like Salesforce or Oracle databases. Like you invent it in Silicon Valley, and it can, scale across the world through the right channels. So it's
Yeah,
always
because it's
a
enterprise,
interesting,
it's business. No, it's
yeah,
business software. So,
yeah.
have you made any of these advanced AI investments yet from your fund? Like in
Uh,
generative AI?
we've invested in companies that have AI exposure, whether that's computer
Sure.
vision or they're implementing generative AI to create efficiencies in their companies.
Yeah.
But I candidly, I found a lot of the infrastructure to be a game that may be better suited for the later stage investors, given how capital intensive
Right.
those those can become. Why is it capital intensive? It should just be software. Well, they're buying like billions of dollars of server capacity from, the hyperscalers and NVIDIA, such that I like businesses that are capital efficient. And the way that the way that some of these AI infrastructure companies seem to be funding themselves is just not a game that I personally am that interested in playing.
Okay, well, tell us about some of your recent investments then, where they were, what technologies they're in.
Sure. Well, we have a one that we're especially proud of. It's a company. These stories are the best, right? Like, what's the founding
Yeah,
story? So
yeah,
so
give
we have
us
a
a really good
company.
story.
So there's a guy who is a Turkish boating maritime connectivity expert who was helping, maritime connectivity for large ships passing through the Bosphorus. Um, and this fellow Bahadir was became very interested in how changes to your smartphone around the SIM card were going to have massive effects in the telecommunications industry. So he was one of the first to aggregate what's now a virtual or embedded eSIM uh, into a very simple user interface, such that when you're traveling, like you travel all the time abroad, you land in I don't know, Dubai, and you click, hey, I want to buy 10 gigabits for $10 of data. These plans are outside of the traditional roaming agreements that you have with your carriers, and they also replace that kiosk in the airport that you see with the physical eSIM. And this company has grown tremendously to millions of users, mostly travelers, business or personal travelers, in the last 2.5 years. And we were very fortunate to have Bahadir join our Singapore cohort a couple of years ago and work on this idea before it really taking off, post COVID. And he's now since raised from, the top tier carriers all around the world, us, Sequoia, Rakuten, Vodafone, Liberty. I can go on, but it's been a really great ride and early days, I think, in the whole phenomenon of the embedded SIM card, which is like a really interesting technology change, has massive implications for the rest of the world, as anyone who has purchased a physical SIM card at a warung in Indonesia or a corner store in LATAM would know. So that one we're especially happy about because Bahadir doesn't fit your traditional founder profile of,
What's the name of the company?
it's called Air Allo, AIRALO. It's the most popular eSIM mobile app in the world.
Oh, wow. Okay. And you were the lead investor, the early investor.
We were the day zero. Antler was the day
Day
zero
zero.
investor. Yeah.
Okay. Okay. So you have this accelerator model in Singapore where you can take some of the best ideas and incubate them there and then actually fund
Well,
them.
yeah, let me explain how that works. So we started in Singapore, but now we operate in 30 cities around the world, where our partners are recruiting founders to what I say, BYOI, bring your own idea. And so similar to what Y Combinator does, but actually even a couple steps earlier, we are
Yeah.
recruiting founders, excellent founders who want to start a company, not sure where to take the first step, may need a little bit of institutional capital and connections to make this work. Maybe they need a co-founder. Maybe they're excellent at business, they need technical. Maybe they're excellent technically, and they need business. We co-founder match. They work with us for a couple months, and it's so fun. In the office behind me, there's 30 entrepreneurs working on these new ideas, or idea spaces. And we do that, the numbers are pretty large. So we evaluate some 100,000 applications per year. That 100,000 gets narrowed down to about, call it, 3,000 that come through our offices and all of that. And ultimately we'll select and invest in about 300 companies. So, less than 1% acceptance rates that get our pre-seed capital. And we're doing that in places like Riyadh, Jakarta, Tokyo, Oslo, Sweden, Stockholm, Austin, Texas, Boulder, Colorado. And these may seem to be not very similar places, but the one commonality that I think you'll appreciate given your writings is that they're all these emerging ecosystems outside of the Bay Area. And we've done that, as I said earlier, for 1,000 companies since 2018.
It's pretty amazing.
Yeah.
So there's a question around the venture capital climate today, that Silicon Valley companies are cash strapped, and not just Silicon Valley ones, but I think this is a global phenomenon where we've seen venture capital really depleted. And so what's your advice for those kind of companies? Where can they get money?
Yeah. I mean,
if they're at the end of their runway. That's a question from Hal Kellman, who he knows what he's talking about.
Yeah. So listen, I think a couple points. The first is, you're right. The funding environment has become a lot tighter since you have higher interest rates, and LPs, who are the lifeblood of the venture capital industry, waiting for the distributions of the capital they invested over the last 10 years. They want some capital back.
Sure.
And so the cyclicality of the VC industry has us in what I think is a cyclical trough, that we're starting to see green shoots of return. But the secular trends like AI or climate tech, or the use of technology in healthcare to lower costs, all of these secular trends around technology, I think, are really promising for that next wave. The same way that after the crash of 2000, we had one of the best vintages of companies created, and it has carried us for the last, what is probably 14, 15 years. So there's reasons to be hopeful, I suppose, is my point. The second, where do companies find funding? Well, I think there has to be this broad-based realization that not every company should take venture capital. Venture capital money requires an extremely high degree of return relative to other asset classes to make it work, given the amount of risk you're taking on. And so the companies that take venture capital not only need to have viable business models. Okay, cross out 80% of companies that got funded in 2021. Within the remaining of those who have viable business models, they need to have business models that can scale to really incredible heights off of very low amounts of venture capital dollars. Remember, WhatsApp, for example, raised less than $50 million in its lifetime to scale to how it has become. That's a famous example. So in other words, you need to have a viable business model, which, with all this experimentation that's occurred in business models over the last decade, a lot of the companies don't have. And we're starting to realize, which emperors have no clothes in many of the late stage companies.
Yeah.
And then the scalability point is really important too. There's certain industries that, that may certain types of business models and companies that just may not scale effectively. And it could be a matter of time and technology and process where, if there was a new technology that came out, the company would be able to scale to a height that it previously wasn't able to because that technology wasn't available for it. Like cloud is the best example, I think, of that. There's hundreds of billions of dollars of enterprise value, trillions of enterprise value that's been created from the advent of the cloud over the last 10 years, that if you tried those businesses beforehand, if you tried, a Salesforce or a Snowflake 15 years ago, it's not clear that you would be able to get to the right scalability of that business model to make it work for VC, but those have been obviously extraordinarily successful. So my advice, you should look yourself in the mirror and ask, if you're an entrepreneur, like, do I have a business model that is viable? And if so, is it a candidate for venture capital scalability?
And venture capital scalability means, what are they
You
looking for?
put
I mean, they want a home run, I know, but like say after the first year, if you don't have like $20 million in revenue, 30 million, $50 million,
no.
what are kind of the benchmarks? What do they look, if they're talking hyperscale, what's hyperscale growth? What is that?
It's all about timing. Like
Yeah, it's timing. Yeah. Like you
timing's
talked about the
important. Like
cloud
I
company.
don't, yeah, there's so many companies that Figma's a famous example of this. Figma worked on their product for 7 years
Mhm.
before it even achieved $1 million of revenue. Venture capital, some VCs would look at that and say, well, I don't know, like, it's not working and it's never going to work. Sequoia and Index, they invested in Figma and did great because it became one of the de facto design tools, now is in the process of being sold to Adobe. Another famous example is a company called Procore, which has become effectively the operating system, one of the operating systems for the construction industry. And it took 10 years to get like their first institutional round of financing. So hang in there, but like, because these things take time. Rome wasn't built in a day. But I think that, yeah. So like I think once you
So,
start growing,
yeah,
what you really, you do need to grow at multiple, um, 2, 4, 10x year-on-year growth, monthly year-on-year growth, monthly growth of 10+%,
right, right,
um, to make some of this work, and not on vanity metrics. I can build in the world if I'm selling $1 for 80 cents. Hey, Rebecca, I'll give you $1 and you have to pay me 80 cents. You take that in a minute, and my revenue that I recognize would be $1, but or my revenue actually be 80 cents. My revenue would be $1, and I would have to it would cost me more.
right.
So
So for your companies that you're advising, if they're
a
at
little
this
bit on.
stage where they're growing really fast, but they may not be profitable yet, right? That's a common scenario. Do they need to be, at what point do they need to be profitable?
It really depends for every business. The availability of capital enables you to grow faster without profits. But if you look at the atomic units of these companies, the unit economics, in other words, you can figure out, well, hey, I need to be, profitable sooner, or I can be profitable later if the
Mhm.
atomic unit that works well. SaaS,
Right.
software as a service, is famous for having to invest a lot in technology and product, almost like building a skyscraper, hiring a sales team, all that stuff before you actually start to see scale. And the quality of revenue you get for a vertical software company that gets implemented at your business and you'll never rip it out. You'll stop paying your electrical bill before you stop paying your software. That enables you to actually invest more earlier on for greater scalability and profitability later. So SaaS has been a great category for VCs who can fund that initial growth as the product and the sales go to market functions are being built out.
And there's all kinds of SaaS, of course, everything from fintech to healthcare. So it's gotten very specialized. So is there any industry
Yes.
like your firm is investing in all kinds of technologies? Is there any technology today that you wouldn't touch because it's not growing fast enough, because you don't feel that it has the potential? Like, what are the top 3 technology areas you're investing in? And is there any area that you're just totally avoiding?
Yeah. So yeah, by vertical, I mean we're still seeing a lot of fintech. I know there's been a correction in that specific sector because there's been a million
Yeah.
ideas tried. But
Yeah,
as
there was
you
a
think
question
about
about what is the next Stripe, if there is a next Stripe.
go buy Adyen in the public markets. So I think, yeah, I mean, fintech is super exciting, especially outside the US. US is obviously
Yeah.
very crowded, but there's continues to be amazing innovation there. But even outside the US and in places like the Middle East and Africa, this is basic infrastructure, basic financial inclusion. We've seen some amazing companies come out of Southeast Asia that, have hundreds of millions of users for payments, wallets, and lending. LATAM, the basic financial infrastructure is still being built in LATAM. So fintech is a big focus for us.
Yeah. And
Climate
and
tech,
that's an area that the US lags actually in innovations, I think, over Europe and Asia. Don't you think so? Banking and payments, mobile
yeah.
payments.
Yeah, I mean, listen,
US is a
like
bit behind.
Visa and JP Morgan are incredible businesses, so you can't discount those. But at the
Right.
same time, I think the most interesting cutting edge, company in probably the world is Ant Financial, where, when they introduced their money market savings account, the deposit base became bigger than JP Morgan overnight. Like and your everything's off the phone. The peer-to-peer payments there are incredible. The ways you pay merchants with QR codes or taps is incredible. So yeah, you're right. Asia has really leapfrogged in payments in many
Sure.
respects, but you can't discount the US. I mean, the US birthed amazing companies in crypto, in payments, lending, in wealth management that I think have scaled to really amazing heights that others perhaps have not. Europe is
Right.
great innovation, but it is obviously a very more fragmented
Mhm.
fabric of countries and languages that make it a bit difficult to scale.
Right. So you're talking various markets, and at one point you called them fish bowls, right?
Yeah.
So of the various fish bowls, which ones are your favorite ones, the ones that you keep going back to? And what do you see as the up and coming fish bowl?
Yeah. Listen, I told you
Well,
this,
first of all, they're your favorite.
yeah, I told you this the other day. Like, anybody who tells you that, like, that they prefer that the US is like that like they prefer any emerging market over the US, I think doesn't have a great understanding of like where the capital markets are and how these companies grow. I love emerging markets, you know that, Rebecca. But
Yeah.
the US continues to be the best capital market in the world, the most innovative companies investing the most dollars in R&D, the envy of the rest of the world in their research institutions across robotics and AI and autonomous vehicles and all these industries of the future. So the US is great. And within the US, this will be a plug for your book. Go out and read Silicon Heartland. Within the US, the Midwest, we have an office in Boulder. You've written extensively about places like Pittsburgh, Indianapolis, Detroit. We have an office in Austin, Texas. These are really amazing places where, out of COVID, not only have really smart people move to build new companies, there's a labor advantage, and there's also a domain expertise advantage. So, in Pittsburgh, you have old industrial
Yeah.
plants that are being now converted into robotics facilities, or facilities, or around warehouse automation and things like that.
Sure.
So that renaissance, your book really made clear for me. It could be one of the really amazing stories. Now, outside the U.S., um, it's not just the weather, but Australia, really punches above its weight in technology investing, and and the growth of companies.
Yeah, I'm
Um,
thinking of Canva, the design
Canva,
company, and Atlassian, another
Atlassian's
major hit from Australia.
incredible. Both are really incredible companies. Afterpay, which got sold to Square. That ecosystem is like, it's like, whatever, 30, I'm gonna mess with the population, but probably 30, 40 million people, who, so smaller than the population of California, who produce some really incredible companies. Oh, and they have a great lifestyle because they all live on the Gold Coast, and
Yeah,
everyone's beautiful, and so
right.
Australia,
And they're all
and they have
going
great
kite
food.
surfing.
Yeah, they have, like, there's a coffee shop in every corner. So we have an amazing team, both in Sydney and Melbourne. And like, I'm continually impressed by the types of talent and captive market
Sure.
that comes out of Australia.
Right,
Um, so that's one.
right.
And then the Nordics too, like, they just did something right on political economy and structuring society. So there's a lot of there is, while obviously there's like a really amazing work ethic, amazing technical universities up there, and you've had some really great hits in companies like Skype or Supercell, or Spotify, and I think that's just the S's, that have come from the Nordics, that have inspired the next generation of gaming and telecommunications,
Sure.
and media companies to be built in that region. Not to
Right.
mention the climate points I made earlier. So that really punches above its weight in terms of creating the next great technology companies.
Okay. So you have not mentioned India yet. And of
Well,
course,
I'm going
India.
there tomorrow.
Oh, tomorrow, right. So
Yeah.
yeah, that's very exciting. So I've been to India several times over the years, and actually India content is in some of my books because I was tracking what was happening in China and it was translating into India and Southeast Asia. So yeah, that's going to be a fascinating trip for you. And yeah, where are you going to be going?
All over,
All over.
most of the major cities, and then ending in Bangalore at the end.
Oh, excellent.
But India's always been an
India is Silicon
inspiration.
Valley, right?
Yeah.
Yeah.
India's always been an inspiration for me during my investing in Southeast Asia days. And I think we do see inspiration in LATAM as well about what's been happening in India. For those who haven't studied that tech landscape, it's fascinating. It's not only the bottoms up growth of a billion three ambitious people, improving their lot in life. It's also a tops down revolution where the government has played a very important role in what they call the India stack. That's the identity layer of it's the identity layer. It's the open payments layer called UPI, and now this ONDC, open commerce platform that the government has enabled small merchants to sell on a government infrastructure at a more affordable rate. And there's a lot of really interesting technology coming out of that. Believe it or not, speaking of cross-pollination, a lot of what's happened with the unified payments interface in India, UPI it's called, that gave birth to all these this QR code phenomenon, has also been inspired what's happened in Brazil with their PIX, their open finance payment rails. And so interesting that India and Brazil are really leading the way in that sort of payments innovation from a tops down perspective. So I think it really shows how the governments and entrepreneurs can work together to something entrepreneurs just can't do. And in Indonesia, I think, with all due respect to the Indonesian government, that was a bottoms up revolution that occurred. It would have happened without the government being in place. Well, you need some stability, but in India, from what I can tell, and I'm eager to learn more, is the governments have played an important role in the development of the technology industry, from a lot of their initiatives in telecommunications, and fintech, and now energy, where they're, I don't know if you know this, but the levelized cost of energy for coal is below that of solar in India. So you have this massive growth in the solar industry in India. A
Yeah.
country that is like, for as big as it is, and many people it is, still is challenged by, natural resources and energy abundance.
Well, very exciting.
Yeah.
Yeah, no, it's great to have your global perspective on the show. I mean, there's very few people who have that kind of depth of knowledge and have traveled to all these places. So that's wonderful. I didn't see any more questions, so I'm going to skip over that one. But I want to tell you about our up and coming shows. It's going to be very tough to top Teddy, but we do have Plug and Play Ventures coming next here in Silicon Valley. Alarisa Masroor, who is also very global and investing in quite a few companies and several unicorns. So that's going to be very interesting. January 17th. I won't also tell you what other day that is. Maybe you can figure it out, but it's an important day, January 17th. And then after that, we're going to one of Teddy's favorite markets, which is Indonesia. And we're going to be featuring Eddie Chan from Intudo Ventures from Jakarta. He's going to be joining us from there. So one of the great things about taking this show online is that we can do it globally. And we have had more than 60 VCs on from around the world, including China, India, Israel, London, most of the major US markets. So it's been really fun. So I hope that you'll join us for these up and coming shows. And in January also, the CES, Consumer Electronics Show, is coming up, and they moved it back 1 week. It's usually the first week right after the New Year. So nobody can really relax over New Year because they're all making plans for CES, at least the event organizers and the media people who are covering it. So our event is going to be January 10th, 5 to 7 p.m. We have a VC from Qualcomm Ventures, a VC from Korea, and we have an Asian brand, HTC Vive. HTC, the leading headset for VR, and he's going to be speaking, so that's going to be great. And so welcome you to join us. And hey, you can support us by becoming a Silicon Dragon Circle member as well. So finally, I'd like to thank Invest Hong Kong for supporting us for the past 2 years. It's been a great partnership. Silicon Dragon does not survive without all of you helping us along the way. So do appreciate that. And thanks again, everyone. And if there are no further questions, we're going to sign off now. Teddy, great job. Really shows your wealth of knowledge
Thanks,
about
Rebecca.
technology and venture and global markets. So thank you again.
Well, I learned a lot from reading your books, so everyone should purchase Rebecca's books. And
Okay.
it's been wonderful being on this journey, with you over the last 10 years as well. So thank
Okay,
you.
well, excellent. Let's continue the journey into 2024.
Great. Thank you.
All right. Thank you. Have a
Bye.
good day. Bye-bye.